Good morning. So, I was thinking about something earlier today that I wanted to share with us, and that was the psychology of the market and trying to understand what it actually is. What really moves price and how to move within it. So, I wanted to share with you some of what I was learning today and thinking about and the conclusion I came to about the market. So, the truth about the market is not a machine. It's not perfectly logical. The market is human behavior on display. Every price movement comes from people making decisions based on emotion, belief, fear, and opportunity. The four forces that drive the market. At its core, the market runs on four psychological forces: fear, I don't want to lose money. It causes panic selling, shows up during volatility and downturns. Greed, I want more profit, causes chasing and overtrading, shows up during strong moves and hype. Belief, I think this is a good company or opportunity. It drives long term investing. It's based on fundamentals, stories, or conviction. Then you have uncertainty. I don't actually know what will happen. It's present at all times, the source of volatility. There are two layers of market behavior. You have one, the survival layer, which is emotional. You have fear and greed, there's urgency, there's reaction based decisions. This is where most people lose money. Then you have, secondly, your thinking layer, which is your cognitive belief and uncertainty, analysis, strategy. This is where structure begins, but emotion still influences it. The core truth: the only certainty in the market is uncertainty. You can't eliminate it, you can't control it, but you can learn how to operate within it. Your role as an investor trader: your job is not to control the market, predict every move, be right all of the time. Your job is to manage your entries, your exit, your position size, and your behavior. The foundation, or self discipline. Self discipline is what holds everything together, but more specifically, discipline is structured behavior in the presence of emotion. I'm going to let that sink in for a minute because that's one of those aha moments that discipline, structured behavior in the presence of emotion, because emotion will always be there. How to protect yourself. You don't remove fear, greed, or uncertainty. You build systems around them: clear rules, risk management, position sizing, and patience. A simple operating principle: I don't need to be certain, I need to be consistent. Understanding price movement simply: you have support. We'll show a little support level here. This is the pre market low, pre market high that's currently going on with SoFi. This support is where buyers step in, order demand, and then you have resistance where sellers step in or supply. These levels exist because people tend to behave the same way at the same prices. What charting really is: charting is really not about prediction. It is recognizing patterns of behavior. When do buyers step in? When do sellers step in? On all these levels. So, how do we use it? We use them to make better decisions. The real risk. The big risk in the market is not the stock. It really isn't. It is your reaction and my reaction to it. Growth as an investor and trader. Real growth happens when you shift from trying to control the market to learning how to operate within the market. Final insight: take what the market offers, but only when it fits your rules. And that kind of ties a little bit in with what we talked about earlier in one of the earlier videos where, you don't see what you want to see or what you hope will happen. You don't try to predict it. You observe what it's showing you, you have your rules in place, and then you act accordingly. Personal reflection. I'm learning that the market isn't something to fight or control. It is something to understand and move within. The more I observe it and myself, the more I realize that success isn't about being right. It's about being disciplined, consistent, and grounded in uncertainty. And that shift is changing everything for me. So, yeah, you're definitely going to learn a lot about yourself, your strengths, your weaknesses, the areas that you're proficient at, the areas you struggle with. And in some ways, your journey as an investor and trader can really help you improve even in your personal life, because the skills that you learn, you actually can apply in more practical areas of your life, just in how you operate outside of things, dealing with these realities and these isms that you kind of pick up along the way of what you're looking at. And it's something to really want to earn a profit, and you're watching price do something where it's aligning with what you want or moving away from what you want, and then learning to maintain your self-discipline and say, well, you know what? We're just going to observe it. We're not going to jump on it like an impulsive teenager. Why did you do that? Oh, I don't know. You're like, we're not doing that. But, it definitely is a great learning environment and can make you money as well. But there's definitely a discipline that comes along with it. And I think understanding the psychology around it, because there was a point in time where if I felt greed or fear kick in, which is a natural emotion, I would judge myself for it and say, oh man, yeah, but yeah, that's the reason why that didn't happen, because, you got too greedy, or what if I'm wrong? And, and you start getting into these different dynamics when you're trading, and they come out to the surface because of the pressure of the trading. Whereas investing can be a little bit more laid back of, I pick good companies, I invest money in them, and they do what they do, and you just let them cook. You don't really, try to operate within the systems while they're working. You just trust that they will. But trading trading makes you a little more to where you're actually moving within a system that's doing things in the present time. And then you're reacting to those things and trying to have a plan, good risk management, allocation going on, and then you're feeling emotions, you're feeling triggered, and you're trying to maintain your composure. And if this happens, I'm going to be mad. You're trying to really wrestle with yourself. So there's a lot to learn in there. But I wanted to share kind of what I was thinking this morning, especially because we just came out of this, whatever you want to call it. The market was dropping for a few weeks, and it was just not really comfortable for a lot of investors. And so I was watching some CNBC interviews where even people on Wall Street was like, they wake up and say, should I sell today? Because they was uncomfortable by watching what the market was doing, instead of looking at it like, well, you know what? This price for this asset is actually a good buy. Maybe I can add, because you're not going to change what's happening in the market. But you have to see, is there a better way of looking at what's going on in the market that can actually work out better for you in the long run? So, I've been really kind of looking at that, because I was a little irritated too. I was looking at my portfolio not be as healthy as it looked a while ago before, but I knew I was irritated, but I wasn't going to do anything like sell it or buy. I might buy, but I had to learn how to wrestle with my emotions and the psychology of what I consider primal instincts. So I just figured I would just pop it on here real quick today and share it with you. So I hope you have a great day. Happy trading. And I'll see you later. Bye.